joined by Mark Hale, who is CIO at Prytania Investment Advisors. Thank you very much indeed for joining us today. George Osborne talking there about ring-fencing the peripheral countries in Europe, about recapitalising the banks and about resolving the debt crisis overall. Particularly strong he was there with regards to Greece. Do you think he's on the right track?
I think there's a necessary evil. There's a short-term need to essentially put sticking plasters over the various wounds of Europe. But that doesn't really deal with the long-term and structural issues that can only really be dealt with by much more fundamental reform.
You've talked actually about the idea of splitting the periphery from the core in Europe. How would that work, and what results would it have in your opinion?
Well, I think it's about creating a currency zone that is feasible, that's credible, that's sustainable, and if we're going to have a union which is fiscal and political as well as monetary, it really has to be a core that can keep with those disciplines. And one suggests that perhaps Germany, Holland, Luxembourg, Denmark, maybe Belgium arguably, perhaps France, who knows, are all part of that original European core. And that is a credible single currency zone. But I'm afraid the Latin and peripheral nations just do not fit that description.
What happens then, in your opinion, to those countries? Do they have to leave the Eurozone?
Well, I think that would be ideal. I mean, it's clearly the politicians and bureaucrats are going to do everything they can to stop this type of development. It's the end of the European dream they've pursued since the Second World War. But realistically, what would be ideal, as you say, it is a core European monetary union with a second tier of nations who wish to shadow the Eurozone, much like the ERM used to function. And then there will be a third tier, of course, of nations that don't want anything to do with it, perhaps like the UK, Poland, who knows? Well,
no, George Osborne speaking there this was his strongest statement yet on what's been happening in Europe with the sovereign crisis. He said that the advice that he gives to his Euro neighbours he gives in private, but he did say that speculation needs to end on Greece, and there needs to be a rigorous and realistic assessment of what is really happening. Did that sound to you like he was calling for Greece possibly to think of leaving the Eurozone?
I think in political terms that did sound like it. As you say, I think everyone realises that continuing to tell a bizarre version of the truth that only politicians and bureaucrats in Brussels can really believe in is not going to work. We had the Italian government apparently today saying that traders should be tested for drugs, and it seems to us that many of the European politicians and bureaucrats have actually been the ones who seem to be on a trip. The realism is about, as you say, facing up to the fact that Greece cannot pay under any circumstances, and therefore the best they can really hope for is a managed default.
If we look at funds, mostly they are able to ride tough times and make money in bear markets. Many funds have found it extremely difficult. We've been looking at John Paulson and the money that he has lost, which is one of the best known fund managers. Why are times so tough? Is there a real aversion to risk at the moment across the board?
I think that's right. I think the combination of events, many of which have been unexpected, including things like the political revolts in the Middle East, the Japanese earthquake, have been so sudden, and they've happened so quickly. And that's meant that not just politicians and bureaucrats have found it difficult to react appropriately, but also fund managers too. And relationships which have traditionally held, as we've seen since 2007, have essentially gone up in smoke. In that environment, it's very difficult, even for a very active manager, to produce solid, steady returns, as you say.
But, we've talked about the concerns over what's happening in Europe. The fundamentals in the US are also something that you're concerned about.
I think that's right. I think the attention switched away from the US after the agreement on the budget in the summer. But the long-run questions about the US remain, not the weak economy, the poor outlook for employment, notwithstanding Friday's better than expected numbers, and then, of course, the sheer unsustainability of the US fiscal position, which has not been addressed at all by the budget talks in August.
But money has to go somewhere. We saw a lot of it in gold earlier on this year. Where does money go? Where should money go?
It's a very good question. I guess we've been partly saying to many of our clients who've been incredibly bearish that they should be buying tins of baked beans, bullets and guns and head for the hills. But I think, realistically, we think the obvious safe havens, have now all performed as expected. Others have been surprisingly unable to perform, and that's the problem of this unpredictable and the savage nature of these shocks that occurred. From our own perspective, we're biased, to be frank, but we think the senior part of the structured finance market, so very safe in our ABS paper, is one of the most attractive places to be on a risk-reward basis, and that's what we've been recommending to our clients recently.
When you look to George Osborne's statement today, he did say that there needed to be a resolution by Cannes and something on the table. Then, do you think we might be seeing the end game now, that actually there is a lot of proper pressure and deadlines that are coming up, whereas for the last 18 months they've been kicking the can down the road, as it were?
I think you're absolutely right. The realisation that you can't fool people all the time, has already happened, and now you can't fool some of the people for some of the time. And as you say, the day of reckoning is approaching. The gap between the rhetoric and reality has been so stark, and now is the time for delivery. And it almost, to a sense, doesn't matter if everything they do is right, much like in '07. It's about calming nerves, underpinning sentiment, and then creating a breathing space for the economies to recover, and then perhaps the deficits start to come under control.
Okay. Well, Mark Hale from Prytania Investment Advisors, thank you very much indeed for joining us.